Welcome back to the Investing Markets and Money podcast. And this week we are catching up with a name that will be familiar to many of our readers, which is Nano One. Dan Blondal of Nano One is joining us to give us an update on the company, all the way from North America. So I suppose it's good morning to you, Dan.
It is indeed, Stuart. Nice to be here. Thank you.
So you have been on the podcast before. Obviously, I encourage listeners to go back to previous episodes on Nano One if you want a little bit more historical background. But for this podcast, we'll be just catching up on more recent developments at Nano One. And Dan, I guess congratulations are in order because the company has attracted further funding for your venture.
Yeah, that's correct. So NRCan, which is Natural Resources Canada, has come in with a $5 million grant, and that complements $40 million that we've kind of already brought in from the Pentagon through the DoD program, and also the Government of Quebec. All of this is directed towards the expansion of our capacity in our facility in Quebec, which is an LFP demonstration facility that we'll be using to serve out some of our first revenues and ultimately drive larger offtake for larger plants.
So how important is this grant to the company and what you're planning to do going forward?
Well, look, I think it's really important to the company in that it provides extended runway to the company. These grants, they're not cash in the door. What they are their reimbursement programs. So we spend money and then they reimburse for the money that we're spent. So what that does is it helps bring many multiples to any shareholders' investments in the company. Any capital that we're currently deploying, we're getting a 2 to 3 to 4 times multiple in some cases, depending on the project and the number of layers of different funding we have in here. So it's really about kind of runway extension, and I think. Also, what's really important here, the government funding plays a really fundamental role here in building out a nascent part of the industry, the midstream in the battery supply chain, which largely does not exist outside of Asia, and by and large doesn't exist much outside of China. China has kind of rock bottom prices, very hard to compete there. Government funding, government support plays a really critical role in helping establish the supply chain, allowing it to grow and into the kind of economies of scale that can then compete with these overseas markets. So that's kind of why it's so important.
And really, I guess it's probably worth setting the geopolitical background here as well for Nano One. You've mentioned China already. The G7 countries are working to decouple a little bit from China, especially the US, and that's partly why Nano One's attracting so much government level attention. Can you explain a little bit more about what's going on there?
Yeah, well, there's several layers here of different sort of motivators. Obviously, LFP is becoming a very dominant chemistry around the world. It's already at 70 to 80% market share in China. Depending on who you're talking to, we see 50, 60% kind of market share extending into the 2030s for LFP. So it's going to be a very dominant player. So I think everyone's very interested in that. There certainly is strong interest in decoupling from China, building out our own supply chains. But I think at the root of all this is it's impossible to copy China's process and supply chain and recreate it here in North America or Europe. And that's simply there are two really big fundamental barriers to that happening, and they're connected. It has to do with the way China's built their supply chain. So for lithium iron phosphate, they rely on iron sulfate tailings from titanium mining and refining, and it's rock bottom pricing. It's virtually zero pricing for those iron molecules. And it's very hard to compete with that in the world right now. You can't go manufacture iron sulfate because your costs will be much, much higher. China has a unique supply of this iron sulfate. This kind of refining doesn't exist anywhere else in the world, and they're sitting on massive stockpiles of it. And so that gives them a really strong advantage, and really couples, if you copy China's process, you're going to be reliant on their iron sulfate. So that doesn't actually do anything to decouple from China. And ultimately, when you process iron sulfate, you create a lot of wastewater and a big byproduct stream, and that becomes very hard to permit in North America and Europe, and it is yet another impediment. So what we've done through process innovation, not only have we brought sort of the precursor and cathode production into one process, so that's kind of vertical integration to drive down cost and energy intensity, but we've also developed a supply chain that uses iron oxide and iron metal powders that decouples from the iron sulfate in China, and also eliminates all the wastewater. So those are the two really big impediments to growth in the West. Driving down cost and eliminating these impediments to growth are why I think the U.S. government, the Canadian government, the G7 are all very interested in what we're doing here. It's not just about creating an LFP supply chain here. It's about differentiating the supply chain that we do create to make it long lasting, to make it cost competitive, and ultimately to make it sustainable well into the future.
And it's interesting because when we first started following Nano One, it seemed like quite a niche area of technology in some respects. And it's as over the years since about 2020, this whole issue is gradually working its way up the news agenda as well.
Yeah, look, we've always taken a long view, and I think at times that's been hard for the investment community to really absorb, because there's a lot of really transactional behavior that happens in this space. So people are, they're building plants and addressing short-term needs, trying to really stuff batteries between wheels today in vehicles. But what we saw is a very long-term trend here, and a long-term trend towards LFP. I think we put a focus onto that much earlier than really anyone else in the West. We acquired Johnson Matthey's facility in Quebec, and that came with a team that's actually been making LFP longer than anyone in the world. LFP was first commercialized in Quebec. The process that was developed there is the one that's used in China right now, so we understand it very well. We understand why it can't scale in the West, and we developed something to get around that. So that long-term view is really now starting to come into play. We laid a plan. We put all the pieces in place. We've developed a plant design that is modular and scalable, essentially franchisable, and that forms a really big part of our business plan. And I think we're starting to see the fruits of our labors really come into play here.
And you have Sumitomo as a collaboration partner as well, and they're continuing to work very close with you. Can you update us on how that relationship is progressing?
Yes. So Sumitomo Metal Mining, we formed a partnership with them several years ago, around this time 2 years ago, including a 5% equity stake in Nano One, and through a lot of really close work with their team in Japan. There's been a lot of due diligence, not only on our technology, but on technology that's used in China and other places to make LFP. And they really do see us as the most viable solution outside of China to establish these supply chains. And that, we had a news release out not that long ago, a month ago, describing that the maturity that the relationship and the partnership has got to with Sumitomo. They came in as a really big supporter on this NRCan grant. So I think you can see that the relationship is developing more and more. So we see long-term collaboration with them as potential licensees, as potential joint venture partners in building out an LFP supply chain outside of China, of course, in Japan and the Asia Pacific, sort of Indo-Pacific region, but also here in Canada and elsewhere. I think fundamental to Sumitomo and why we came together as partners in the beginning was that because we eliminated wastewater, they recognized we eliminated the impediment to growth in the West. They've been making cathode materials for Panasonic and Tesla longer than anybody. And they understand how those wastewaters and how those byproducts really do limit growth in the West, and really we're looking for solutions that would remove that impediment. And it's why we initially came together. And through an extensive amount of due diligence, we are now much closer and looking to drive the relationship even further.
And I think since you last came on the podcast, the company's joined something called the Arkansas Lithium Technology Accelerator, and you've actually been down in Arkansas recently. I mean, obviously much closer to home than Japan. Can you tell us a little bit more about what that is and how that's helping the company?
Yes. So the ALTA, as it's known, was we were kind of in the initial cohort put together. The Arkansas government and ALTA really came to us looking to build out midstream in Arkansas, knowing that even if they built out the lithium mining in a smackover in Southwest Arkansas, that they'd have to be shipping that material to China to be converted into cathode materials and only be buying it back as cells. And of course, that's got a lot of geopolitical baggage attached to it. And they recognize that they really wanted to build out the supply chain. They see us as, like Sumitomo, they see us as really the only viable solution here to build out something that is effective and scalable in the West. So they brought us down to Arkansas in July. We spent about 3 weeks down there, various team members, myself included, over a period of 3 weeks, just building relationships, learning about the various jurisdictions within Arkansas, where the support might lie. And really meeting government officials, not only really right down at the community level, but all the way through to the larger Secretary of Commerce, and into the really into the federal level and the state level government as well. So those become very important. I was just at the Arkansas Lithium Innovation Summit this week, just back last night, where it was a very unique lithium conference with 900, I think, attendees, probably one of the biggest lithium summits in the world, and very, very much kind of homegrown and organically grown summit. It's only its second year. And I think what's important to understand is this is very much about growing out the lithium market and the supply chain, the academic know-how, and really bringing strategics and attracting capital into Arkansas to drive out drive out the upper part of the supply chain. So lithium, the midstream where we are, the refining of the lithium, all that plays a really fundamental role in it. I had the honor of going to dinner with the governor of Arkansas, Sarah Huckabee Sanders, and with a number of other CEOs of strategic organizations. And I can honestly say there's support there from the governor. She's obviously got the ear of the current administration and has a tremendous amount of pull there, but also her dedication to Arkansanians and really building out of the economy there is unparalleled. There's really nothing. I haven't seen anything else like that in the U.S. We have a similar level of commitment in Quebec, and I see a lot of parallels there between what seems to be very much a growing and very healthy opportunity in Arkansas that parallels what we also have in Quebec.
And why do you think it is that Arkansas has been taking the lead on this? Is this just because they're more exposed to some of these supply chain issues that we've been discussing already?
Well, look, I think the fact that they're sitting on a tremendously important lithium asset. The Smackover is a deep brine asset of lithium. A deep brine asset. They have actually been pulling bromine out of those deep wells for 50 plus years. So Lanxess and Albemarle and a number of their big players have been working there. Standard Lithium, another Vancouver-based company, saw an opportunity many years ago to go in there and prove out a DLE to start extracting lithium from some of those bromine assets, and they partnered with Lanxess to demonstrate that. I've been to that facility; it's pretty incredible what they've been able to pull off, and they found higher concentrations of lithium in other wells, and have a project in Southwest Arkansas to develop a program there. They're partnered with Equinor to do that, and that's really driving a lot of interest in the lithium space. But they recognize that they need the midstream to make it successful. Can't just extract the lithium. They really need to be able to convert that into value-added materials that can then go into cells that are ultimately going to be produced in North America.
And speaking of lithium partnerships, obviously you've been working with Rio Tinto as well. How are things going with them?
The partnership with Rio is going very well. In a recent news release, we talked about the qualification of various lithium assets. Some of them are more developed than others. We've done anywhere from kilogram to hundreds of kilograms to many ton level qualification of those lithium materials for use in the one pot process. And that's all really part of the bigger design of what we're doing. As your listeners will know, because we eliminate the wastewater, we actually can modularize our plant. We don't need to do custom engineering and custom permitting of our plant. It means we can kind of shrink wrap the plant and basically package it up with the key pieces of equipment, the flow sheets, the know-how, the design of the plant. But if we bring that to the table also with pre-approved lithium feedstock and pre-approved phosphoric acid and iron feedstock, it all of a sudden becomes kind of a franchisable opportunity here. We can provide the training through our facility in Quebec. We can possibly bring offtake through our facility in Quebec for much larger volumes than we can consume there. Combine all that together, and what we have is this kind of full package deal that we can bring to a larger facility in Quebec, in Arkansas, and other jurisdictions around the world. And very much as part of our larger growth strategy. It's not a competition between these jurisdictions. We feel that each one of them will play a fundamental role, a very important role in building out a larger ecosystem here that can get to the kind of economies of scale that will compete with China, and ultimately do it in a way that is environmentally differentiated and also cost competitive.
I just wanted to ask you about your patents as well, because obviously the patents is a very big part of the value of the company overall. You have been continuing to add to these over the years as they've been coming through. How are those going at the moment? Have you had any new ones granted or approved?
Yeah, we've had a number of approved this year. I think our count is at 52 or 54 patents now approved, and these are not only in U.S. and Canada, but China, Japan, Korea, Taiwan, Japan, India, in Europe as well. And so these are all really important part of the protecting our portfolio and adding value to this kind of licensed package that I spoke about before. And we continue to innovate. Got another 50 or some patents pending in jurisdictions all around the world. And so you can expect to see the growth of that portfolio continue into the future.
And I just wanted to go back to China briefly as well, because obviously one of the big issues within the news has been the restrictions on exports that China has been implementing. And that's obviously in turn triggered a reaction from the US as well. How does that impact your business and the sector that you work in?
Yeah, well, let me give you a bit of background on that. I think that it's important to understand that. So lithium iron phosphate. China has a really big advantage. They've been at it for longer. They really have a kind of call it a 15-year advantage. Yeah, we understand a lot of it from the work we did in Quebec in the early 2000s. Our team there, but ultimately they've got to economies of scale that have allowed them not only to drive down the costs but also to drive up the quality of the product, and that advantage is what they're trying to protect. So they've put restrictions on the export of their processing know-how, feedstock. So the iron phosphate, the lithium iron phosphate is sort of the very best of all of that. They put limitations on the equipment, and all of that really is aimed at protecting their lead. And so that's where we see the crux. We have to solve that, and we largely do by tackling the iron sulfate problem, by tackling the wastewater problem, and by developing our own IP that's independent of China. So we basically have a solution that is entirely independent of China from intellectual property, know-how, equipment, and supply chain point of view. The U.S. has responded, of course, to this by putting first the incentives in place during the last administration's Inflation Reduction Act and what they call the 45X tax credits. These are very large tax credits of $35 a kilowatt hour. This is on battery cells that are costing somewhere in the neighborhood of $50 to $75 a kilowatt hour. So it's a pretty significant tax credit that can be applied there. But the latest administration under Trump's guidance has actually put these prohibited foreign entity provisions in place. And that basically means if you build a cell, but you're still using LFP from China or some significant component of the LFP from China, you basically are excluded from being able to get that tax credit. So if we look at the numbers, just blankly, there's 200 gigawatt hours of announced capacity in North America today for LFP. Multiply that by 35, that's $7 billion a year in tax credits that are really kind of on the line right now if those cell producers can't find a localized supply of LFP. So take what China's done from a technology limitation point of view and what the US has done in putting these incentives in place. That's complete wind in our sails, and we see a tremendous opportunity here to solve the tax credit problem and also to solve the competitive the competitive challenge that the U.S. has with China. We can drive down the cost, we can make it cost competitive, and we can decouple, and at the same time provide some of these cell producers with the means to pull down some of those tax credits.
And I'm going to ask you this because a lot of our readers obviously live in the UK and Europe, and they're probably going to be sitting here saying, oh, "This is all very exciting for the Americans and the Canadians, but what what about poor old Europe? I mean, is Dan going to be doing any deals over here as well, or are we just going to get left behind?"
Look, we're very actively involved with the G7. We're going to be in Europe this next week and through mid-November. We've got various trips over there, and some of that is focused on investors and shareholders, but a good chunk of that is focused on speaking with the OEMs and the cell producers who are going to be furnishing LFP batteries in Europe. And we see, an opportunity here. First of all, through what we're doing in Quebec. First of all, in the plant in Candiac. Second of all, we have aspirations to expand into Quebec. That LFP can certainly feed into Europe, and ultimately we see an opportunity here to build out in Europe as well, and bring our one pot process to Europe to serve all those big LFP cell plants that are currently being those projects that are currently being planned out and built out in Europe. They're going to need LFP supply. They're going to need to decouple from the Chinese supply chain. They need to decouple from that iron sulfate. Ultimately, because they won't be able to absorb the waste streams in Europe. And so there is innovation required. And, we can, as I said, we can serve that initially out of what we're doing in Quebec and ultimately grow into Europe. And we very much have designs to do that. And we're looking for the support through the G7, but also through, the larger consortium and ecosystem in the not only in the European sort of EV market, but also in the energy storage data center push there as well.
And really, my last question is just: is there anything you can talk about in terms of what we shareholders, I say, because I also have shares in the company myself, what we can really be looking forward to from Nano One over the next 6 months or so?
Well, look, we've never ever finished with our non-dilutive capital exercises. So we put we've put now probably $45 million in non-dilutive capital into the company in the last year, and actually more than that, because we sold off some chunks of property that we weren't using. So we're probably closer to $65 million in non-dilutive capital, and we're not finished. We've got a few tricks up our sleeve still, and obviously what we see in the U.S. and Canada and Europe in terms of backing companies that can solve some of these geopolitical issues and localized supply chains. That's going to be really important. We're going to continue to advance our licensing plan with Worley and our CAM package, really building out that franchise that I spoke about earlier. The capacity expansion in Quebec, in our existing facility there, it was very, very fundamental to what we're doing. It will ultimately lead to some of the initial sales we see in the defense industry. These are much needed smaller volumes and much needed sort of initial sales and revenue that will obviously pump money into the treasury at Nano One, but also bring confidence to the product and the technology and the process and the equipment that are needed for much larger facilities. We'll continue to bring new partners to the table. We're not done with Sumitomo and Rio Tinto. We're talking to many more, and ultimately, the licensing deals will start to come into play and come into focus in regions around the world, and that'll be through partnership, that'll be through joint ventures, that'll be through project development, and ultimately we'll be developing supply chains that are unique to each one of these jurisdictions as well, leveraging the flexibility we have in the one pot process. Innovation, we're going to continue to sort of have patents being issued ultimately and wrapped into our licensing plans. So that's kind of it in a nutshell. A lot going on. The pieces are all starting to come together. The hard work that we've done on LFP, the vision I think that we've taken, long-term vision on LFP, is starting to bear fruit. And we're seeing a ton of engagement, not just from government, but also now more and more from industry.
Oh, that's fantastic, Jan. And obviously, good luck with your trip to Europe, and thank you very much for coming on the show today as well. We'll be continuing to follow the company with great interest.
Thank you, Stuart. Always appreciate it, and have a great weekend. I hope to see you soon. I'll be in London in a couple of weeks, so maybe we can tee up a little bit of time together.
I look forward to that.
The content of this podcast is for information and entertainment purposes only and does not constitute financial advice. The views and opinions expressed by guests or hosts are their own and do not necessarily reflect those of the armchair trader. Investments can go up and down in value, and you may not get back the amount you originally invested. Past performance is not a reliable indicator of future results. We do not provide any personal investment, tax, or legal advice. Always do your own research or seek independent professional advice before making any financial decisions. The Armchair Trader is a media company and is not authorized or regulated by the Financial Conduct Authority.